Good afternoon, guys. It's Saturday, December 18th. My name is Dave Coker, and this is Talking About Finance. As we usually do, we'll start out by looking at the markets, and my gosh, what's going on considering where we are? Where is my Santa Claus rally? SPX was all over the place this week. It was down Monday and Tuesday, nice bounce on Wednesday. We thought we were home free, and straight down right until Friday. Closed down about 1.94%. Not a significant drop, but pretty surprising. The VIX behaved as you'd expect. It peaked on Wednesday, closed this week at 21.57. Not too far off its long run mean. So we're not really in trouble there. Now, the 10-year traded down slightly, closed at 1.41%. Oil down to 70.36. It's down about 0.1% on the week, up about 45% on the year. And of course, Goldman had that call last week for $100 a barrel oil by Q1 of 2022. Now, 3 points about last week. First of all, the Fed signaled we're going to see faster rate hikes, and perhaps than the market might have expected. That's shaking some people out. Tapering is going to drive volatility. We've talked about increased volatility before. It looks like that's going to continue. And third, we're really in the middle of the cycle. So there's plenty of upside left considering how the U.S. economy is performing and the whole timing, of course, of the rate hikes. So we'll have to see how this goes. But I'm not losing the faith. I'm not selling stocks. I tend to just buy and hold because, as you know, I collect dividends with the exception of the gold and silver. And of course, the Bitcoin, I just collect dividends. So I don't really mind when there's volatility or even sharp drops like this. But still, take a look at what one of my friends posted on the Telegram channel on Monday, and we were chatting about it. My gosh, look at the put volumes. It's really amazing, guys, when you take a look at where we are in terms of the put volume, and it hit a record. So it looks like the bears were out in force. They were planning, and sure enough, it came to fruition. We take a look at S&P 500, and this is a really fascinating one. Comes off some Goldman internal research that we got our hands on. And here you can see the bulk of the return, or a good chunk of the return, I should say, of the S&P 500's returns come from just 5 stocks. Really wild when you take a look at the returns from the other 490 odd companies. It's really fascinating to look at that. Of course, that's concentration risk. If they start to stumble, any one of these 5, let alone say 2 or more of them stumble, we've got a problem in terms of where S&P 500 is going. And when we take a look at different metrics, something here is really fascinating. We can look at earnings yield, but let's convert it to real earnings yield. We look at earnings yield all the time to find out when we should buy or sell. Take a look when we look at real earnings yield. And all we're doing there now, this is off Crescat, all they're doing is they're subtracting CPI from the earnings yield. And you can see it's gone sharply negative. We haven't quite seen anything quite like this before. Even during the inflation heyday, the last big run we had back in the late 70s, early 80s, we haven't seen anything quite like that. And here's an interesting one. Now, this is Peloton, and they're getting beaten up. And if you had bought Peloton, say when it IPO'd, you were quite pleasantly surprised when during pandemic, it turned into an absolute star. And look at the stock price in pandemic. It really soared. Now, I'll be honest with you guys. I hate lots of stuff, and I'll always tell you what I hate. And I don't really like Peloton. I wouldn't say I hate it. Well, let's talk about it. Why in God's name would I buy a 4,000-pound exercise bike to begin with? Now, I might buy it if it's going to last. There's a good argument for buying quality. You know, you're talking to a guy who wears a Rolex. Good quality watch will last 100 years easily. But an exercise bike for $4,000, that is possibly palatable. I don't really like it, but sure, let's go with it. We're going to get the exercise bike. Oh, it comes with a bill every month. You got to pay more to keep that thing on. And furthermore, now I haven't paid attention to the history or the news after this, but it was revealed that when you don't, and I know they were saying they were going to address it, because if you don't pay the bill, the device is bricked. In other words, forget using it, even without the fancy analytics that they give you, and also the inspiring images of the trainer shouting slogans at you. Punch through the pain, you can do it, all that stuff. It comes with a monthly bill, $35, $40. There's no way. So I'm not surprised to see the stock crash and burn. We were emerging from pandemic. Of course, things change very rapidly, don't they? We were emerging from pandemic. We'll have to see exactly how far we tend to go. Maybe it'll bounce back. I'm not so sure, but I wouldn't go near this stock at all for one simple reason: no dividend. Doesn't pay a dividend, I'm not interested. And we can talk about my other rules later in terms of how much I want. And Mohammed Al-Arian, of course, he worked with Bill Gross at PIMCO. And they had a falling out, as the story goes, and they split. And Bill Gross is off doing his own thing, as is Mohammed Al-Arian. He's turned out to be very insightful and very influential, and I agree with him. Remember, the Fed was talking about how inflation was going to be transitory. I never believed that, and I've posted slides for you guys that said we were in for about maybe as much as 3 years, at least 18 months to maybe 3 years of above trend inflation. And yeah, Mohammed Al-Arian tends to agree with that call, basically saying it was really bad. It really discredited the Fed, which I agree with. We're in this period of rapid inflation right now. It's really interesting overall that people could buy into this transitory argument to begin with. I never believed it at all. Now, as you know, I've got a good chunk of my retirement money, some 67%, in fact, in gold and silver. And guys, I'm not selling. It's been a rough couple weeks. I don't care. I'm up substantially on silver, about 50% on silver, roughly 20% on gold. I'd have to look at the numbers. You guys can do it. I bought gold and silver in March of 2019. So just go ahead and check the returns then. It's roughly 50% on silver, about 22% or so on gold. And yeah, rough couple weeks. I ain't selling. I'm going to hold on. When will it be time for me to sell? I'll know when it's time to sell, but it ain't time to sell yet. So yeah, keep the faith. If you're into bullion, yeah, hold on. I might actually buy more. I'm a little irritated the way it's behaved over the past few weeks, and I've got some liquidity. So yeah, I might be grabbing some more. And finally, this is a really good one. Whoa, what happened there? There we go. Sorry about that. This is a really good one. Oh, Nancy Pelosi has been coming out and warning us about the threat of cryptocurrencies in general, stablecoins specifically, posed to the U.S. economy. Yeah, well, you can't do anything about it, lady. It's like, what is your spending with the U.S. dollar doing? Don't you think that's a bigger risk to the economy? Don't you think the inflation that your spending is driving is a bigger risk to the U.S. economy? I've got a fundamental problem with somebody in their mid-70s or early 70s. She's ancient, though. She's really old. I got a real problem with her discovering and warning us against some threat. She's getting paid. There's no doubt about that. She's getting money from lobbyists and things like that to say these things. There's no way stablecoins are a threat to the U.S. economy. And to show how clueless she is, what can you do about it, lady? You can't do a darn thing. These entities that offer stablecoins, unless they're domiciled in the United States, you can't stop any of these entities from backing their crypto, their token, with the USD. You can't. You absolutely can't. So it's really interesting that she's coming out and speaking about that. We think it's all a run up to the Fed, to the Fed's central bank digital currency. Not totally sure, but it's interesting. All right, guys, that's it for today. Have a great weekend and a really good week. I'm really hoping we're going to get our Santa Claus rally in this week. We've got, 4 days. I'm not sure what's going on Christmas Eve. I'll have to check NYSE and see if they're trading. Plenty of time for Santa to bring me my Prezi. I want a Santa Claus rally. Even if there's no rally, guys, buy stocks. Buy gold, buy silver, buy Bitcoin. Take care, guys.